Check 1, 2. All right, so welcome. Let's see if we get this thing going. Nice and live right before lunchtime. All right, so welcome. Thank you so much for joining me. It is around noontime here, Eastern time. We're going to try to do a little bit of quick technical analysis things on the charts here. The markets should be a little more choppy today, just with the Fed announcements. Usually what I find is with the Fed announcement, what happens is people are always like worried. There's a lot of like this pre-talk or pre-chat ahead of time. And then the Fed announcements, basically not the announcement, but the minutes this time get released or dumped, or some kind of news event or catalyst, and it happens like all over the place all the time. The catalyst gets dumped, and then the market kind of fluctuates for like the last hour. And then the next day, again, it kind of fluctuates for a little while. And then finally, things will stabilize a little bit. So there's always like this choppiness that happens during these kinds of days. So I usually try to do a lot lighter trading in these cases, just because there's just so much chop that goes on. So what I want to do today is just kind of give you some ideas as far as, hey, let's look at a longer term technicals. Let's look at where we're at. Let's look at this with a rational mindset. Let's not get too emotional about it. Yeah, events are going to constantly happen. No big deal. There's always something to worry about. There's always something to be positive about. So we're probably somewhere in the middle, somewhere in the average, somewhere in there. So let's not get too wrapped up into any one way or the other. Okay. So let's go and kick things off with some charts. I'm going to go ahead and just go through some of the larger stocks as well. So we'll kind of go through the list of a lot of different companies. If you have specific companies or charts you want me to look over, just let me know. I do want to give you kind of a couple of quick announcements. As usual, none of these are recommendations to buy, sell, or trade anything, just my opinion. If you also want to go ahead and hop into our Discord channel, you can do so. You can ask questions in there. There's also some announcements in that area. There's also the Traders Fly website as well that you can check out. We've got an upcoming class called Market Seasons, where we'll talk about trading in different kinds of environments and different kind of conditions. So you can also look at that on tradersfly.com and register for the class. There's a lot of other live classes we've done, not so much on all technicals, a lot of them on options because it's a little more advanced and more complicated. So anyways, check that out as well. So I'm going to head on over to kind of the chart panel. There's going to be a lot of different things that I'll cover. I'm going to start first off actually with the ETFs today, and we'll look at some of the more popular ones and what I would maybe do with some of them as far as maybe some option trading goes, and just overall my personal thoughts of where they're at. So right now, based on the net change, UNG continues to kind of press into these higher prices. And when you look at this one on the weekly chart, you can see we're getting into this upper range with UNG. It's just, again, kind of in this toppy level. So we've got some resistance over here at this area. You had a base right around $10, and $10 is a very cheap area for a stock anyway. So it usually holds support, even though sometimes they break under there. But like I always say, hey, you meet your friend at 6. Sometimes they show up 550, sometimes it's 605. So anyway, $10 is a pretty solid support. So when we look at this, $10, and now we're getting into the 20, also a little bit of a problem zone, 1, 2, kind of trying to break through. So we'll see if this can hold. It could be a double top, so watch out for that. If you look a little more on the daily here, it is technically stretched. So I would expect a short-term pullback. This is where I would do actually a vertical put spread right at the money to see if this could pull back even to maybe a $15 price level or $18, which is kind of where it could be a little bit technical. Hey, Jeff, how you doing? SPY, QQQ, IWM, yeah, those are kind of big ones. Let's add you as a moderator as well. Okay, so yeah, these are the big ones, ETFs. So I think SPY, toppy around that 4,600. So if we look at the SPX, short term, we're already at the highs right here. There's that 4,600 that I think we're kind of ready to pull back. 4,400 sounds like a good place to possibly bounce for a bullish side. Longer term, possible to get back into the 4,200. There's no question about it, because you could come back to retest those levels. Could we chop around here for a while? Yeah, could be. But right here, this is kind of shorter term bullish trend. If we have economic problems, instability, this 4,200, if that takes out, you could see some serious trouble, because then you're going to see longer term downward. But right now we're still looking at a daily. And the thing with the weekly, we're still actually on a weekly time basis, we're still just chopping in this zone. So there's not enough data really to see recession or full downward, but you can see it's trying to start that way. So again, I'm looking at around, from a SPX perspective, about that 4,600 is kind of that range. 4,200, we're going to be chopping, I think, for a little while, and a possible bounce around 44, at least temporarily. QQQ, they all act very similar in this case. So about that 350, I'm looking at the highs here where it got rejected. You're always looking at the swing points. That's where the swing points tell you where people lost the most amount of money at any given time, or made the most amount of money. So those are the swing points, are the change in direction, right? And you can see this is a very clean cut at 370 right there, rejection. And I think 330 is kind of that base. Yes, there's this 320 area as well, but you're kind of looking at those levels for this these cues. From a longer technical pattern, we had this going here, and now we're starting to kind of base sideways. So I think right now sideways, which is choppy, again, just chop, 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 chop. That we'll probably start seeing, or continue to see here over the next couple months is probably my guess. And IWM is no different here. We've got that 210. When we look at the Russell and the 190. So again, you're seeing a lot of things in that sideways area for now. What I don't like seeing as far as the momentum goes is you've got a lot of sideways thing with volume coming in. And if this starts rolling over, that's where the negativity comes. If we start breaking these lower levels, and that goes along with all the indexes, ETFs, if we start breaking this, getting up into those higher levels and then rejecting, and that includes the QQQ, SPY, that's when you're going to be looking at really shorting all the pops. Right now, yeah, you could do it. You could short the pops and it's fine. But when you really would get more aggressive into it is when you get a clear break and you're starting to create lower highs, because that's when you're starting to seeing a continuous trend, and that could last for a while. And if you look at SPY and we look at kind of this monthly chart, this thing looks nasty, and that's where you get some serious problems that we can actually get back into those levels, and that could be disastrous for a while. So that's putting it way over here at 333 quite low. Okay, let's check out some of these other ones. XLE. Okay. XLE, I think's a little toppy. I tried to short it back in the day a while, got burned on it. Reattempted again somewhere over here, did okay. So now again, I think it's not a bad opportunity to try and short it, or this is actually a really interesting play from a gamma iron condor perspective. So if we go in and look at gamma iron condors right here, and you put a position, because what you're seeing is right now compression like this, and the volume is drying out. And with a dry up in volume, a gamma iron about 40 plus days out would be kind of an interesting play right here, because you've got a nice setup where the stock could either break out and you get euphoric movement, or break down and you're getting some movement. And with gamma irons, what happens is you're actually just really burning theta and time, and that's your pretty much biggest risk. And right now with choppy markets, it's kind of tough to play directionally. So this is where, burning through time is not bad, waiting to see which way it moves. So I would play it kind of that way if I was looking to trade it, because it's just chopping for a little while, and I think that chop will probably break here or here. I don't know where, but from a probability standpoint, that's maybe the way I would trade it. SLV, I don't really trade SLV that much at all. I just kind of keep an eye on it. 25 was kind of a critical point. We had a rejection here. You also had some of these upper levels right here where you had compression on a triangle pattern, and 20 is kind of a key support right there. So, when you're looking at those two levels, those are kind of the swing points in that area. You did have this massive breakout at this point when you got into that $10, $11 range, a snap up. So I think 20 should probably hold. If you get a further pullback, you'll probably see those silver buyers or people who are into more commodities probably trying to take and buy into it. XLPs, consumer staples. I traded this one here and there in the past. I don't trade it as often, but you're looking at this being a little bit of a toppy area. You could get into those higher levels, of course, just keep in mind, but you're getting stretched a bit. Just look at that angle. The angle is pretty steep, and you got a dry up of volume right there, so it doesn't look very fantastic or great. I think you'll probably see a slight pullback sometime soon. That would be kind of expected. And let's see, GDX, I don't look at that as much. GLD, gold here, you could see very explosive run back to more normalized levels. So now we'll probably just see a little bit of sideways action for a little while. You are starting to see some signs of bearish sentiment coming in right now. And that's not good. Because it could be just stretched from some area. So watch out for this. If this starts building more and more like downside spikes, that could be a problem, because what it's doing is it's like hitting and pounding on the floor, and eventually you get a hole there, and that could bring it back down. So watch kind of this level right here, which is right around 172. That's where that breakout started. Right here, there's the breakout big bar. So that's also your resistance over here. And because of that, that's going to be a level to watch, because that's where a lot of the movement, a lot of the action started to play in. And that's where you want to watch for possible support. Okay. XME miners are very toppy. I was looking to short these yet, didn't pull the trigger, but it's still in that wheelhouse and range right here. You know, could easily pull back 55, 50, very nice round numbers. So this one, you could see there's some support levels, but I think it's quite toppy if you look at it right here. So there, upward trend, angle, very steep, very accelerated. So this would be an interesting one to kind of short. Zoom. Yeah, I've been watching it. It's at the $100 level. It's just not there yet, I find. A lot of stocks like that, with PayPal, with Square, you know, they're kind of basing at these $100 levels. Even Roku here, when you start looking at some of these, they're all at this nice round number. And the thing is we're either going to start holding a lot of these, or we're going to start rolling over. And we're starting to roll to come back to either retest this 100 level, at least in Roku, PayPal, you could see Square, same thing right around there, got into a certain level and coming back. And same with Zoom. So we're trying to hold, but you can see the momentum, it all gets into that toppy level and it's starting to pull back. So for now, I'm not there yet. You're probably going to see a lot of the movement coming into earnings, because we do have the earnings coming in 5-4 here, Square, also 5-4. So with Zoom, it's a little bit later, but I think with earnings is just, you need to watch out with the earnings coming right around the corner. There will be moving some of these stocks more or less, I think. So Zoom, very nice sweet spot right there. If it can hold, obviously, problem bit is we still have this volume that's been selling off. It is descending, so that's good. Typically what I look at is, let's say we've got this descending trend. It's starting to break. This is good sign, but we're not really progressing yet too much. Here's kind of like my color indicator right here. If we look at the white bars are starting to cross over, moving averages, it tells me it's starting to cross over. It's still holding that. That's starting to move okay, but we're not in a full mega kind of yellow zone where we're really clean cut. Like you could see here, I have a little indicator that's color coded where at the beginning, white might be a little more aggressive. It's starting to build momentum, and then yellow, I'll color code them yellow, and it automatically does it for me, where all the moving averages start to line up and there's just more momentum that kicks in, and that's when you go a little more heavy. So anyway, that's kind of another way, you know, I just kind of double check myself from a visual perspective there to just keep an eye on. But yeah, this one kind of 100 is still there. It's still early to nibble at some of these longer ones. Question here regarding XME, would you express a bearish via put vertical? XME, here, yeah, if I was doing a position here, I would probably do a vertical bearish at the money put spread. for something like this. Probably about 40 plus days out or 35 plus. It wouldn't do anything too short because it could move too quickly. Okay, let's see here. Diamonds. This is the Dow Jones, which again, not as bigly watched, but here 330, 350, same thing like a lot of the other ETFs. TLT surprised me a little bit from this area right here. So if I pull back, here's the swing low. It's breaking down, and that's obviously going to have some more negative sentiment. So now what we're looking at is a possible A to B, B to C, C to D. So I think this one actually can go now much further, and I would be prepared for that because that's a nice breakdown. And when you look at this, the measured move expected, again, I've known to be wrong, but the measured move here is about 38 points. Again, you can calculate it from the swing lows to the swing highs exactly to be more precise. So if we get that same movement, let's say 38 points or so, that puts us almost to about a 114 or so, which is going to be about the lows here. So that's kind of actually very, very interesting. So right around this range is kind of where you would expect it if you got a full A to B, B to C, C to D pattern to play out. Not all patterns work out. Yeah, you're welcome. Okay, XLI. I always think of this one as China for some reason because it's X for China. But anyway, it's the industrials. You can see what happens with some of these, just like the mining stuff. They get into these toppy levels, like real nice round numbers. That's why these are really fantastic to do spreads on. They're like always perfect round numbers. And this one broke down. So I wouldn't short it now at any given point. I'd actually more look to buy dips on something like this. Support is more here. I still think it may have a little bit longer to go to the downside because you're still, if you look at it, you're still kind of at the upper end, a little bit choppy here. But when you look at like a 2-day here, right here, it's still not fully in this whole range yet. So I think a little bit lower, and then I would maybe look at buying again a dip. This Brazil one, my friend's a Brazilian I work with on the trading stuff, really exploded too. So fantastic from all the way here. Getting into the 40, I think you're getting toppy in this area. It's probably capping out somewhere in this zone. So I would look to short it. And you can see we're starting to pull back a little bit. Even a pullback to the 35 would be normal and healthy before even a higher up. Even if you're a bullish kind of investor, a pullback to 35, pop, move could be nice. You know, it's just normal. SPY, we did EEM. Let's not worry about it. IWM, we did EWJ, Japan, not a big deal these days. FXI, China, there's a ton of trades here, but it's choppy a little bit. QQQ, ITB, home construction. This one I do like to watch a little bit because you look at home construction. Here's the breakdown, continues to move lower, a lot of volume coming in right there. So anything kind of to the bearish side is kind of what I would look at. There's a lot on the bearish side on the weekly and stuff. And these are the types of stuff that I would look to trade more nowadays because with earnings around the corner, there's a bit of a problem with trading some of the stocks because with earnings, there's just not a lot of open available dates, shall we say, that you can't go through without hitting or running through earnings. So these are kind of some of the ETFs. XHB, another big one that I would like to trade and traded many times. So here again, breakdown, downside, huge selling pressure. So again, anything on any pop, I would look to short this. So when you're looking at it, here's kind of your movement, support. There's resistance, came right into it, rejected. So if it pops, I would short it. You can see all the bearish volume there that's coming in. All the dry up and volume right there is the bullish volume. So dry. Everything that's big is going to be bearish right now. And just be careful that these don't get too far weighted to one way or the other because they'll snap back the other way. XRT is the retail, which always interesting because retail sometimes you think of like regular stores fronts and stuff, but what you'll see here is we got this bowl-shaped pattern and volume building, and you got a building in bearish volume. So it's definitely quite negative, and I'm going to just say, hey, this thing's toast for a little while. Here we've got kind of support here. There's the resistance, which now will become support. it could come down all the way down there. That's just the logical fact of the longer term. But if we look at the kind of the 2-3 day, I only look at that just because it cleans up the chart a little bit. We're looking at maybe around this 70 is the kind of the little bit of the low right there. Just you have that low flush, and that's kind of that low that I'd watch to see how it behaves here. Other than that, you've got a lot of the bearish volume here trading, and we'll see if it can hold here because fast move, slower move sideways, so digesting. So we'll see if it can hold 70. That's kind of one to watch. And the technology sector, XLK, which a lot of people watch. You can see we're holding kind of some of these moving averages here, but a lot of things are starting to roll. So this is what you look at when you're looking at charts, is if you're starting to see that roll effect, that could be a problem. Again, you try to hold some of these red areas, and we're just trying to get back into that zone where we were in the past, 145. If it pulls back, that could be a problem. And this is where, similar to this chart, if you look at this and you look at the SPY, doesn't that look very similar? Right? So when I look at this, it's very tech heavy. I mean, that's just the industry these days. If you look at and study some of the old historical books from charts, you'll notice like back, I forget if it was the 60s or 40s or 50s, somewhere around there, there's like a lot of railroad companies at one point, and you see like a lot of railroad heavy companies in the market. Then one of the years you see a lot of the steamboat companies in the stock market. And like nowadays you don't see like steamboat engines in the stock market trading. So what you'll see here with the XLK, the technology, and you see the SPY, I mean, they look very similar. And it's partly because of the weight that's all of that involved. Right, it's just the stocks that are available there. Let's take a look at a lot of the big movers here with some of the stocks like Twitter. Let me just take a quick peek. SPY down about 60 again. Okay, so Twitter here, as we take a look, you know, Elon Musk here got into this kind of stuff and so on. I think it's extended. I mean, from just a chart technical perspective, and you see what happens, you get that euphoria move, and now it's starting to pull back a bit. Partly it's just the market dragging it down too, but it's just when it gets a little too extended, then you get a pullback. You get a large gap here. That's a little bit of a problem. Volume was picking up. Maybe they were already knowing something. Maybe they knew they were going to nibble, test out the shares, test out the water, and then really it exploded here. So a lot of volume came in right there at that point. And I would say a little pullback is in order. It's natural, and some people will probably take profits. Dave and Buster's Entertainment, so this is like gaming stuff, right here around $50 per share. You're a little toppy. I wouldn't be surprised if it pulls back, sells off. You had it low at 10, right? A lot of stocks hold at that support of 10. If they don't, then you got real trouble. 30 is kind of support right now, and you got 50 as resistance. So you've got that $20 range in that sideways area. So if we look at this, here it is at 50. Here we are kind of at 30. Rejection, probably come back to test some of these low levels at those points sometime soon, I would think. It's a $10 a stock. So again, if you like doing speculative stocks, starting to kind of come in there. But again, these are cheap. Usually they pop and then sell off. So pop, maybe sell off. So be careful if it breaks 10, which it did before. But if it keeps going, this is going to be toast and be a little bit of a problem. You can see this one's $6 stock, not even worth talking about. ARK, this one's getting hit fairly heavy. Again, tech heavy here, 70, and you got into almost about 50. A lot of people do ETFs these days, just longer term investing. It's fine. Resistance, support. So probably will come back to retest either the 60 or 50 price zone. That's what I would watch. Watch for this volume to see if you pick up speed. And if you see it more like this, like on this bearish side, that will be a problem if you start seeing this grow over the next few days, right? And then that could be an issue, because that could also mean it could continue lower, right? And that's where we get some more issues. Shopify, you could see a lot of the stocks are very similar. Breaking down, got into resistance right here, support around 500. So watch out, could pull back quite a bit, but you want to watch this volume. This one's got earnings coming out very soon, kind of like Netflix, which is $4.19. Very fascinating. And here at 350, it's coming back. But the thing with Netflix, what I like is it's already sold off quite a lot. You've got this sideways digestion period between 400 and 350. And when you look at kind of it does trade a little lighter, so you do have to be careful. When you look at the volume, even on the selling off volume, it's not as nasty like some of the other stocks. So this one's actually one of those that's kind of almost oversold zone. And that's why I'm looking at this kind of, this zone is what you're looking at kind of at buying the dip. So anyway, but obviously anything can change. Shopify, I think it's got a while to go. That $500 zone, it's just very pricey. It's also very illiquid. It's a little tough to trade Shopify. Let's take a look at UPST under the 100. Right here, a little bit of trouble, but this area could be quite a bit of support because it's been going down, and now we're getting sideways. So this is usually a good sign. Also, the thing you're watching is about 85, 86. The other good sign is a little bit of descending the bearish volume. So, this is kind of the level I would watch right here for a possible support or bounce. Qualcomm, there's been a lot of talk about it. You're basically filling this gap a lot more so. Right here, resistance at 160. Came in, rechecked, now selling off. So probably about 130, 120 is kind of what you're watching now as we continue to pull back. And that's kind of what we're looking at. Snow, very similar. Let's check out, what did I want to look at? Lows starting to break the 200. If this cannot get above 200 within 2 days or so, this could be trouble because I was looking at this right here as a critical level right there. So if this can't get back above 200, because sometimes what they do is they snap down, they play, and then they get back above it, just like in a lot of areas, like here they go above it, or even right here they get under it, they get back above it. So many stocks do that. So if it gets under here and it stays and hangs and keeps going, that'll be a little bit of a problem. But 1 or 2 days it's not too big of a deal. But if it can get back above 200, that could be a nice play. I was also watching Home Depot here. Similar aspect of the $300 price level, but it's starting to break below. I'm not seeing any like massive volume on the selling pressure yet on this one. We'll see if after the Fed stuff, if this does. If it does, 250 could be a buy zone here. This one's just been pulling back. It's already 26%, I believe, lower. So if we check this out right here, 29. Okay, so 29% lower. If we get down into the 250, our percentage 40. So much different than something like Zoom. When you look at these companies, they're down 80%, but Home Depot's got a big store and they have real estate. So it's a little different than Zoom, but still you're looking at it from another perspective kind of thing. Okay, so let's go ahead and let's see what else we've got. AAL, Twilio. Twilio was one I was watching as well. Right here, just a lot of tech companies. It's just the world we live in. There's just a lot of tech companies. 150, nice resistance here. This is a breakout point there, so that's kind of what you're looking at there. And now this is possible support. Problem, again, bearish volume. You see the bull pattern right here picking up some speed. If we're trying to look at this downward, just trying to get some sideways, we'll see if this 150 can hold. And just like many of the stocks, we got this flush at 130 pop resistance. We'll see if this can hold. Right now it's breaking down. The volume is weak on the sell side. I will say the volume on the bearish side is weak. So this could actually reverse very quickly to the upside in many of these stocks. So be very careful that, you go too heavy on the short. It looks negative. The market's negative. It's been negative. Typically stay with the trend, but I'm always careful that the selling volume is not as big, and that is possibly because we've just been selling for so long. So be mindful of that. Your thoughts on T? Okay, T. T is a nice dividend stock, I would say, from a dividend perspective, but it just chops around. 20 has been the lows. I always just look at this one at like monthly charts. 20 is kind of what you're looking at. If you're trying to buy the dip, this is one like, hey, I just want to collect my dividends. Because it doesn't really grow like that. It's just like, as you could see from the year 2000, it just chops this way between 20 and 40. So if you just want a bunch of share accumulation, you're looking at 22. I mean, that's the way I would trade. It's just buying more shares, trying to get more dividends. That's just the way I would look at it. You're starting to see some rounding here from a shorter term perspective. Yeah, you can see and say that 23 getting there, but I mean, this thing doesn't move very much. You got between 23 and $24 just in the last like 3-4 months. So it just doesn't do much. It's one of those dividend plays kind of thing. Does cost look extended to? Yeah, it does. I just was talking about that one as well. It does, but it's one that can keep going, because if we get a bullish move, it's holding. It's a bit extended, but it's holding. And if I look at just some of the averages and everything, it's actually set up to just keep going. Everything set up to keep going. It's not mega overextended. It's there. It's okay slightly, but it's holding. I would just kind of use a stop of just right under about 565-ish or so. Just kind of use this as a huge baseline of support, because right now what they do is they break, they come back to test and go higher. So right now it actually looks fine, and the selling pressure is not that negative at all. Earnings is a little bit later than usual than many of the stocks, so this is good. So, from a shorter term basis, with the market being a little weak, yeah, you could say it's a little extended, but it's not too crazy. I wouldn't say it's mega extended where you see like a huge pop. So it's been going, but it's not too bad. Maybe that's not as clear of an answer, but yeah, it's not too bad. You're doing a classic move where you break, test. The problem I don't see right now, I don't see the market isn't going with it. If you see the market going with it, and the stock, that's usually much more positive. Right now you have the negative market that pushes it down. So that's a bit of the problem. And Kroger, if we look at Kroger, I'd say Kroger is a little more extended only because of this gap. When you see these rockets, this takes time, and it's been doing that. So this one's a more extended than Costco. When a stock's going like this for a while, it has time to digest a move. But when a stock moves very quick and then sideways, like that, this is just too much of an angle to go. It's too fast. So I'd say this is a little more extended, and that's why it's requiring this move. So if it starts breaking the 60, I'd almost like to set my alert at 60 and see if it goes. Or if it gets into 55, it's kind of buy the dip if you're looking to kind of go long. That's how I would look to trade these, is, kind of 53, 54, or somewhere there, try and nibble up, or even 50, nibble up. It's kind of like lows. I kind of nibble the dip around the 200, take a shot. It's that type of stuff. You could do it on the break, but if you do it on the break, sometimes that break gets in here and then you kind of miss the move, or partly. If you do it on the dip, it's a little more aggressive. So just be a little more careful, whether you do Kroger, Costco, these kinds of things. So they're doing okay and they're holding up okay, but there's a lot of stocks that are kind of oversold, and you can see like here, like if you get into Facebook even, which we haven't covered yet, if you get into Facebook and you got in it here after all these moves, you kind of already missed half of that move, because now it's pulling back a bit and you're back to where you were, right? So the more crazy thing to do would have been to buy on this big nasty down candle. You got it somewhere here and eventually you get out. But it's a little bit more scary to do that. So even if you got out like right here, that's a good move. But if you got in after already a confirmation, and now you're starting to see this, the growth there is not as big. Okay, let's see here. We were around Home Depot, and then we were a little lower to Twillo, and then let's go to Amazon here. Also a little bit toppy. They're investing a ton. You can see it's just the move is very quick. Had this as resistance level, so we're pulling back. You could pull back quite a bit here and still hold. This is a big juggernaut. 2,800, kind of this zone is support. Watch for a possible bounce around this 3,000, 3,100 level. Could easily bounce, and then you could have a A to B B to C, C to D pattern. So again, it looks nasty, 112 negative, but it's not too crazy for what the stock does. It's a $3,000, $4,000 vehicle almost. So pull back here, possible bounce. If we break through, watch this zone around 2,800. TLT we talked about. Pinterest I got out of this actually right there. I had this one. I was trading it right here. Didn't reach full profitability, made a little bit of few bucks here and there, but now it's breaking through, so all bets off again and waiting for it to kind of reset. It's back in this range now. We'll see if this can round back. I got this actually as well. What fascinated me here was with the Twitter. This actually pushed that stock higher a bit, so maybe sympathy play. Uber here, if you watch, same thing, breakdown, volume, nothing big, lighter, so it could just be normal pullback for a possible here, or if you got it here, watch this 30, because that'll be your support. And then we'll look at coin. No big deal on that one yet. Let's see, we got Western Digital. Now, let me put these at the top here. Western Digital is one I would watch around this $45 price level. Kind of this, actually I need to buy some hard drives. Here's 50 is the support, 45, nice round number. Then you got kind of this zone where this stock right here was doing some of the support level right around 35. So you got 50 right around that $44 zone, 44, 45. You're coming right into it, and that 30, 34, $35 zones to watch. Starbucks, I tried to trade in this zone, took a loss. Volume too weak to push it, didn't do it. Bearish volume, took a loss right there. 85 gone. So here's the 80. We will see once it resets again. We'll take another shot at it. So for now, gotta give it time to reset. Here's 80, looking for that support. We'll see if it can bounce. But for now, market's still acting weak. This stock's acting weak. I got out on this down day right there. Continue to go down 1-2 more days. Volume's picking up, so it needs time. 80 is kind of support to watch again. How about Zim was moving strong, but has been selling off hard the last few days. Zim. Yeah, this one. Okay, shipping services. Okay, yeah, a lot of shares. Yeah, I would look to short on any bounces for something like this. It looks toast. You could go ahead, you could do short for longer term and think, hey, watch out for earnings. Possible that it gets into these lower levels. You could short, but just watch out, because you could get snap ups. Like right now, we've got a nasty move down. You could snap up and then sell off further. From a longer term perspective, this thing is negative. And I would say this thing could continue going down for a little while to retest around that 30 some dollar price level, maybe 34. That's what I would look for, is somewhere around 34 on the longer term scale. Now that longer term could last 3-4 months. The problem, you got some earnings, so that's a bit of the issue there. Okay, so now Dkng is a popular one here for you guys, I know. Looking at this one, I tried to trade this around the $20, $25 level. Didn't work out. Here's 25. And we're just going sideways after this big down move. So watch this 15. This 15, if it can hold, that's what you're watching. The volume's declining. Just like many other stocks, you have this upward trend, got into the 20, rejecting. So if we can't hold 15, that'll be a problem. For now, it's just lightly selling off a little bit for the volume side. But 15, 16 is kind of what you'll want to watch. If you cannot hold there, the stock can be toast. Walmart's one that's been doing really well. I think I like this one from a longer term perspective, breaking out similar to kind of Costco. You can see where the money's moving. You got Costco, you got like Walmart, this kind of stuff. And if this starts to break through, it'll probably retest, and then that's what you'll watch. If that happens, that's maybe more of a technical play like that that I would watch in Walmart. Is a possible break, which is happening now, a little rollover to retest that, and then pop. That would be the classic move right there. CRM, I was watching right here, but unfortunately it's starting to break down. So I would watch this 190 for a possible support. Okay. We got into this resistance, a little bit of trouble up here. Watch 190, possible bounce. Stock's been going down and now some sideways. So pretty good to start doing some sideways trend movement. And if you can get that rounding, that'd be good. But unfortunately right now you've got this breakdown. So 190, that's what you'd want to watch. Microsoft is another big one. You could see just rolling over. 280 is a critical spot. You can see there's a few spots right here. And we've had this move up similar to just the SPY, resistance, breaking back down, may come back to retest those lower levels, or even just 290. If you see a lot of the stocks coming back to this 290 and going, this will be very positive then. Okay, if you see something like that and you start seeing like a move where you're starting to create this new trend, that'll start looking a lot more positive. However, if we come back to retest these levels and even break through these levels, that'll actually be more problematic. So it's going to be a very critical spot here soon. Roku, similar, we've talked about this. You've got this solid level of about 100. You're trying to watch. It's just been going down for a long time. I think temporarily, like there's just so much selling that's already been going on. You know, you would expect a little pop in some of these. So just be careful on if you ever short any of this stuff, the other direction in a way. The inverse, what can happen is you can get some nasty rallies against you if you're ever short. 50 support on this teledoc. Okay, 200 is kind of the highs. You can see already we've sold off quite a bit, actually 300 here. So we're already down 77%, and you can get down in the 50s. So, you know, you're trying to round 80, 60, getting sideways. So it's almost like you're if you want to get into it, it's a little bit early. How about LMT and CAT? Actually, funny you say CAT. I shorted this last week and it worked out well already, and I'm already out of the position. CAT's, I think, a little toppy, 230. So again, very extended, very good move around the 180. Now I think it's actually extended from a longer term trend. You're still lower. So I did short this one before and now I'm out, and I will look to reshort if it bounces. But this one, you've got support here, and resistance at those levels. So that'll be here. We'll draw it this way. There we go. So that's resistance around 230, and support you've got about 180 and also some at around 190. And if we look at kind of this daily area, the reason why I shorted is just this move right here. This move was too fast. Okay, way too fast. So I shorted in this zone. I think I was after this big bar right here because I like to short on big up bars. And then actually it just panned out and worked out well over here. So it knocked me out. So I think we could come back to 210. Maybe you'll find some support here. You've also got some support around 190. From a longer term perspective, still down here to some degree. From an even longer perspective, you could get that way. So again, just depends your length or duration of view. So that's kind of interesting, right? You have like really different views that you could have with this stock. You don't always see that with a lot of stocks. LMT here also extended, I think. Very fast rocket ship. Digestion sideways. This is almost an interesting flag pattern to some degree, or consolidation. So I think this one, it's possible you could get another move higher just because it's been pressing in the way it's consolidating. The energy, the flush down and still holding. You could get the next leg higher, and you got A to B, B to C, C to D. So this one looks okay. Solid at 330. You've got this one that kind of lines up here. So those are kind of the levels I would look at in this case for this type of stock. So right here, 430, 455, boom, move. If you're getting in on it early, you'd get it on before the breakout. There's also nice bullish volume right here that's starting to pick up speed. So this is good and a good sign. Watch out. There was some rejection right here that flushed it back down. A little bit stretched, but that could be just because it was stretched for that short term. So careful at that zone because you could get some resistance. Okay. Is that one your strategy, Sasha, to get positioned on a big green bar? Yeah, if I'm shorting, I'm going to position on a big green bar. Why would I short if the stock's moving down and you're shorting, you're not letting the full probabilities go in your favor as well. If you short on a big up day, you're much more likely to get that down move later on. You have let's say you give it 30, 40 days, you play the contrarian view. In the same way where if you have a nasty move, let's go to lows here. If you get a nasty move down, big down day, you'll probably get a snap up and then you're out of the trade after 4 or 5 days. So you play the opposite effect and you're just letting it kind of work out and play out. So yeah, that's the way a lot of traders like to do it. Let me just check SPY real quick because I might have to head out and do some position tweaking, or I might have to get some lunch soon. Okay, so I'm okay here. Didn't do much with the markets yet, so we're good. AMD, I think it's coming back to the 100, just like many of the other stocks. I do have some positions on this on the longer scale, selling some calls against it and coming back into the 100, so I probably should go and sell some more now just to hedge off some of the risk. But I'd watch this 100. If 100 breaks, and that goes along with a lot of these other stocks, if this starts breaking the 100, this will be a problem. And it can pop first and then sell off. This will be trouble. Roku, PayPal, Square, you name it, Zoom, a lot of them at around 100. It's just amazing how they're all tying into that 100. So be careful. There's Zoom and Tesla. Look, this thing, rocket ship, right? Big up day, large move. The short right here would work out quite nicely. Even if you get a little bit of a down move more, this will be really sweet for a short. I did not short it, but this one's very tricky to short. You have to be on top of your game because it can run very fast against you. Here's the 1200. You got resistance kind of coming right in. If it would have got there, I probably would have shorted, but because it's here, it was a little early for me. Because this one just can whip you, but it's still an accelerated move, a little bit of digestion, pull back, fill in this gap right here, could bounce and still can get into the 1200. So be careful because this volume on the selling pressure on Tesla is not that big. You look at this, there's still people that want to get in it, right? There's just still people that want to get in. So I would, you could nibble a short, but it's a little more, if I was to do it, I'd probably do a butterfly, just more defined than a vertical. So I would do it a little more carefully there. Just Tesla's a big boy. I'd be a little extra cautious there. It's just my take. Home Depot we talked about. Take two. Let's see. Nike. Hasn't really done too much lately. And I think that's about it really that I wanted to cover. Let's see. JP Morgan, some of the banks, McDonald's. If we look at some of these, McDonald's is, also quite a bit stretched. If you look at this thing from here to now here, it's a little bit stretched in my opinion. So, and the volume on the upside is just very weak. So when you look at this, it's weak volume on that upside. So I'd be a little careful. This Robinhood thing, again, tried to break out, boom, failed. One day, done. So you can see why one day just does not make a trend. It's just a good example of that. Intuit, kind of the same thing, tried to make it one day, boom, sold off. Not a big, not holding there. Autodesk here, got in the lows 190, got in, back to a little chop. Actually, let's look at Adobe real quick. This one, if we look at the weekly, there's the weekly long chart. This was the more normal chart I was looking at, but you could see this one, again, very stretched, but got down, holding. This is going to be an issue if we do this with a lot of stocks. A, B, C, D. So if we get back up, reject, man, some of these things will be in big trouble. Because if I don't want to panic you here, but here's going to be an issue. Let's move this over. This is when you look at a bear market. This is going to be the nasty part. you're going to see these stocks get, let's say here we take Roku, A to B, B to C, get back into this level. And this takes, usually a year or two. It'll go into here, reject, and you'll see Roku at like 50, or like same thing with like Square. Like you'll see this, like, well, here, boom. It's almost kind of back to like 50. So you'll see like Square at 50. Again, not saying you will. I'm just saying like that's a bear market kind of thought because it gets oversold. T-Mobile looks good here from just a general price action movement. So you're seeing here this movement here, little break, shorter term, 110, nice support here. So and then again, you're starting to see some moves. You see this rounding area, starting to see this movement here. So yeah, this looks fairly nice from that perspective. Right there, there's the movement here. So yeah, it looks okay. There's not a lot of volume. Like the volume's weak. The bearish side, again, is not really there yet. A little bit here, but nothing too crazy. But even the volume on the bullish side's not really there. This could be just the market. The market is weak. So market weak. So that is also a problem. So it's tough to push stocks, any stock, when the market itself is weak. So you have to be careful when you look at buying dips, because it's tough to push stocks when the market's weak. That's just the natural thing. It's just the market. If it's pushing it down, a lot of stocks will be pushed down, not just one or another. Okay, we'll do one or two more maybe if you've got them, and then I'm going to kind of close it up, head out for lunch, and we'll call it a day for now. Bank of America, probably a good one to buy the dip here soon if you're kind of a longer term investor maybe, or be a little more careful for A to B, B to C, C to D. However, sometimes that B point right here can hold, and that's where we're getting into this. You've got 50 resistance. Remember when this was like, oh man, this stock's going up really well. There we go. There's his nose. But now what we've got is right here, support. This one is what I would look for, 38. Just too far stretch maybe a bounce, support here. But, it could also lead to a possible A to B, B to C, C to D. So now that could be even more bearish. And that's, again, I don't want to freak you out, but I'm giving you the two sides of the coin. Or here's kind of a bounce. So that's kind of another one I would look at. Etsy, trying to hold here at 100, similar, digestion here, triangle, maybe wedge pennant type thing here, break to maybe support here at the 100. So watch out for the market. It's just going to be choppy here. We've got down 60 points. We got these Fed things, I think 2 o'clock maybe Eastern. I don't know. I'll have to check. 2 o'clock usually is the time, 2:30. So anyway, keep an eye out for the Fed stuff. How the market behaves is more important than what they say. That's what you want to watch. Usually it also lasts into the next day. So even today, like let's say we've got this announcement today, you'll see some choppiness and then it'll close. And then what you'll see is the next day, again, you'll see the futures act, but really that first 2 hours of the open tomorrow, it'll probably do more stuff there as well. That's maybe a little more crazy. So keep your eyes open for that as well. Okay. That's all I got for you today. I'm going to take a breather, enjoy the rest of the day ahead. Have fun. Be careful on the trades. We've got, we're down 60 now. This longer portfolio, I'm down quite a bit. So, be careful. There's a lot of stuff here that can whip on you one way or the other, and everything's just looking red on this account here. So, be mindful. Thanks for joining me. Enjoy the rest of the day ahead, and I will see you next time.